What was your biggest cultural shock moving from the private sector to the public sector?
Well, in public sector, there are a lot of protocol. In the private sector, you're a bit narrow in how you look at things.
We're sitting down with a man whose career spans from global consulting, economic transformation, and leadership at the highest level of public service. He is the special advisor to the president on industry, trade, and investment.
The lens through which we look at challenges is quite different because in the public sector, sometimes people think you can run a country the way you run a company. When I speak to young people who are starting out their career, there's a framework called FIRE, financially independent, retire early. It is a movement whereby you start aggressively investing the younger you are. The younger you are, you should take more risks. The money you make, invest it, take opportunities to learn as much as you can in whatever it is that you're.
Hello everyone, and welcome back to another inspiring episode of Financial Talk with Victoria, the podcast where real story meets real strategy. I am your host, Victoria. We're sitting down with a man whose career spans from global consulting, economic transformation, and leadership at the highest level of public service. He is the special advisor to the president on industry, trade, and investment. Welcome with me, Mr. John Uwajumogu. Mr. Uwajumogu is not only helping to shape the policy that drives Nigerians' economic direction, he is also influencing how a new generation thinks about opportunity, nations building, and the future of enterprise. Today, we're going to uncover the lessons behind his journey, the discipline that guide his leadership, and the practical strategies young people can apply to navigate, work, and seize the opportunity emerging in today's economy. This is not theory, this is lived experience, distilled for your good. So settle in, and this is one conversation you will like to be clear. Thank you so much again, Mr. John. Appreciate it. It's such an honor to be here. This is one conversation that I've looked forward to for a very long time, and I'm happy that I have the privilege to have you.
Grateful for the invitation as well.
Can we get right into it?
Yes.
So the first question I have here is, you've spent over 20 decades in global consulting, navigating complex infrastructure and energy deals. What was the defining moment that made you transition from corporate boardroom to the presidency inner circle?
It wasn't a single moment. It wasn't like a single minute that drove that decision. Interestingly, before I took on this appointment, I was working for a global consultancy, and part of my remit, part of my mandate was energy, government, and infrastructure. I did a lot of consulting work for public sector clients, such as the World Bank, the FCDO, World Bank funded programs, FCDO funded programs, and interestingly, for the Industry, Trade and Investment Ministry as the beneficiary of those consulting mandates. I had worked on projects such as the Africa Free Trade Agreement, non-oil exports, looking at new drivers of growth for the economy. Without knowing, I was being prepared in a way for this role. When the opportunity came to serve in this administration, I've always thought about some sort of public service. In what shape or form, I wasn't sure. But when the opportunity came to serve, it's not like there was a shining bulb moment that said, okay, I need to transition. It just, the opportunity came, and I believe the experiences I've had prepared me for it. And more interestingly, I saw it as a test. Oftentimes when people who work in the private sector, but interact with public sector occasionally like I did, this was an opportunity to actually be on the other side of the table and start seeing how things are. You're no longer just coming up with a nice report and recommendation and you're walking away, right? You are now actually have to live it. It was an opportunity to come and experience that side of it, to see whether all these recommendations, all these things that we say from this side, now can you actually do it? The opportunity to serve your country as well. Couldn't pass that.
What was your biggest cultural shock moving from the private sector to the public sector?
There were a number of them. I don't know if I'll characterize it as a shock, but it's just how things are done differently. The pace at which things move are quite different, because in the public sector, things can move very much more. Yeah, private sector things. But then the responsibility and the range of consequences, whether intentional or unintentional consequences, can be contained. It's small. But in public sector, there are a lot of protocols. Just mastering the protocols to even making a decision or anything, it's a handful. Whereas in private sector, depending on your level, if you want to get something done, it can just happen, right? But in public sector, it is more deliberative, a lot more consultation. The implication of any decision made is much wider.
Yeah.
And then also the lens through which we look at challenges. It's quite different because in the public sector, in the private sector, you're a bit narrow, you know how you look at things. Right? At the end of the day, does it make money or does it not make money for the organization? But for government, beyond profit and loss, right? Does it bring the most good to the most people? And the stakeholders varied, are wide, much bigger than what's obtained in another aspect to that is how the approach toward problem solving. It's quite different. And to add another element, so sometimes people think you can run a country the way you run a company. No, not the same thing. There are some similarities here and there, but some of the skill sets may transfer over, but they're two different challenges, different enterprises.
Thank you so much. So for young Nigerians looking to start a small-scale manufacturing business, what specific trade policy are currently in place to make startup less of a financial burden?
Well, not only manufacturing, any young person looking to start a business. We're a country of entrepreneurs. About 67% of people are employed by small businesses in Nigeria. We have about 39 million SMEs who've shown a high propensity to start business, to be entrepreneurs. And that entrepreneurial spirit and the culture that we build, I believe, is the reason why our economy is so vibrant. I mean, if it's just taking a look at the creative economy space, taking a look at fintech, what has happened there is very organic, largely youth-driven, which just shows you how the entrepreneurial spirit just keeps growing. And government recognizes that. And so what government looks to do is, what are some of those binding constraints that it's an obstacle that stops someone from starting a business? What are those key binding constraints? And if we address those binding constraints, then it would unlock the doors would act as a master key solution. Then all other problems or challenges that are attached to it will be addressed at the same time. And a key binding constraint is finance. And with that in mind, one of the first things that His Excellency was to approve an intervention fund for 50 billion naira intervention fund, targeted with dimension into 3 separate funds. One was for nano businesses. So these are businesses that are young person businesses. And there was a grant. It was about 75 billion. Then there was another 75 billion that was targeted at manufacturing businesses. And then another 100 billion at general for small businesses. And a large part of small businesses are. This was an attempt to catalyze commercial activity by addressing a major binding constraint, which is access to finance. But it's not only access to finance, but access to finance that is affordable, cheap finance. Because it makes no sense if I tell you, okay, you can come and borrow, but are you borrowing at 40%? How are you going to?
Crazy.
How are you going to make a profit?
And we see those bank, commercial banks, it's just
And the reality is the nature of the economy that we're in. And that's a good point. Just to step back a little, part of the first, just before we get down to the targeted, because what I was just describing now is the targeted approach, targeted intervention that the president, but before that, that's the more of the broad-based reforms intervention that the president that put in. This is what is not as targeted, but it's about creating a conducive environment. So one was removing the distortive impact of the various exchange. So removing the various different exchange rates that we had, so that it's more of a market-oriented exchange rate. Using monetary policy to target inflation, because your interest is a reflection of the level of inflation. Macro reforms. It is an attempt to create a conducive environment that allow businesses to flourish. So that's the first step. By addressing inflation, liberalizing certain aspects of the economy so that it's more market-based regimes. All those reforms.
Just to add to the reform, I noticed that they're selling off some private, some government assets that are not functioning. Is that part?
Exactly. Even with MOFI, with the MOFI's mandates and looking to MOFI, the Ministry of Finance Incorporated, the mandate is looking to optimize and extract value from public assets that are within the government portfolio. An estimated about $300 billion worth of public assets. Do you can extract 10% every year? That's a lot. That's that aspect. In fact, in regards to that, one of the reforms was to accelerate the concessioning process. So before, for any public assets or service to be concessioned under a PPP, you have to go all the way to the Federal Executive Council to approve, irrespective of the value. So when the president has come in and as a executive order that for certain types of private partnerships that are below a certain ticket value, then you don't need to go to get the approved at the general the ministry, because those assets are, while they're owned by both of us, under the supervision of different ministries, so they need to also be part of the concession process. Reforms such as that goes to creating that environment, enabling environment. Then to complement those reforms, to transform the economy, you now have the targeted reforms that will act as a catalyst, introducing targeted interventions that will act as a catalyst for that commercial activity that should arise as a result of the enabling environment to be triggered. Because sometimes reforms take time to take root. And economists are saying in the long run we are all dead. So we need to, it can't wait for how long the reform to take its turn, the process to take its turn. You need to start seeing results. So part of that is to complement your reforms with targeted interventions that will act as a catalyst for that. Those activities that you want to see so that they can be triggered and start manifesting. So part of that was the access to finance, the 250 billion pension fund. Then you have sector-specific programs as well. You have the IDICE, the Investment in Digital and Creative Economy, which is about a $600 million fund that is designed to support businesses operating within the technology and the creative space, and most of it targeting MSMEs. But a lot of people who operate in that space, you have a big recapitalization at back of the industry, which is the primary development finance provider in Nigeria. Because they're providing funds that are concessional but are cheaper compared to commercial rates. And it's designed to spur, apart from the macro reforms, which we've seen its impact because inflation keeps coming down, foreign reserves keeps growing, the excess volatility that often attends our exchange rate is no longer escaping. We've seen that stability, and that has manifested in increased portfolio investors coming in. Next, we're going to see more FDIs coming in. People say portfolio investment is called hot money. They come in and within a few months they leave. But FDI, it's more enduring. It stays for a while. The goal is to continue to drive more FDI. I mean, the president has already set the target of $1 trillion economy by 2030. And building out a $1 trillion economy is going to need the participation of the youths. We're a young country. The majority of our citizens are below 35 years old, and we're going to add an additional 60 million people in the next 30 years or so. We are going to be young for our entire money. That constituency is a big part of that economic growth, and a lot of these reforms and targeted intervention is to make sure that youths are either gainfully employed or they're able to start businesses.
Thank you so much, sir. You talk so brilliantly, and it's so amazing. You can share so much wisdom, so much insight to public sector, what's currently happening in the economy, and which I feel like everyone should be aware that we are actually driving towards something, and that we're positive that it's gonna actually turn out with a smile on our face. I'm gonna break it down a bit more so that our viewers can get to understand and comprehend to the limits of terms what we're trying to say. I'm gonna tell a story of let's say Chioma. Chioma is a 29 years old young entrepreneur. She has a pig farm of about 1,000 piglets, and she aimed to further expand that farm. And she's looking for very affordable financing to help her further expand. If you were Chioma, what are the steps that you would take without making any phone call, no connections now, you just Chioma in the farm? What will you do? Walk me step by step.
But if I were Chioma or advising Chioma, governance is very important. For somebody to invest in you, they need to know who you are, right?
The first step would
You're running a business. It's important for your business to be registered, to have your CAC certificates, have your tax numbers. I mean, it's important for a number of things. One, people recognize your business as an entity. They can go and verify that it really does. At some point, your business is beyond you. And creating that governance enables investors to ascertain where the value is in the business, in your managerial capacity, as well as in the piggery business as a enterprise on its own, right? And obviously, the combination is the value proposition that you're bringing to the team.
You know, there's this thing about registration where we have the enterprise, the limited liability, then the public limited liability. If you were to advise Chioma, if you were Chioma, which would you go for? Seeing that you're not so big.
They have their pros and cons. I don't want to be very specific to say this is the best, but if you put a gun to my head, I'll say maybe an LLC is the best way, maybe the best way. But that's not, I think whatever is easiest when you're starting off, you can just do that. What doesn't cost as much for a startup. You can always change it as you go later, right? And what is important here is just basically, register the business, the bookkeeping aspect that comes along. Because if this piggery is already existing, right?
Yeah.
So she's been selling piggeries, and it's good to have because again, and it's all part of governance. When people are making a decision about you, performance speaks, right? When you have a track record and you can demonstrate that track record, people are more willing to give you money. I mean, investors want to get their money back. So having a business plan, and what the business plan does is that it articulates to potential investors the growth potential of your business, how you plan to expand it. If you're giving me money, what the businessman is telling them is, this is how I'm going to make you 3 times, 4 times your money. And this is how we're going to do it, right? Where you go. There's a strategy behind this. It's not just, vibes and a shower. You have where we're going. It's important to have that. Now, all of this costs money and takes time and effort. And sometimes it's a burden, and in fact, it's a big burden on why businesses don't scale. Because when they go out to the marketplace, because they don't have governance, so they're informal. It's hard for investors to follow. Investments are doing that. Essentially, it's a risk assessment. How risky are you? And if you're too risky, then it's reflected in how maybe the interest rate you get, which then becomes cost prohibitive, and they start going to other channels. A lot of the programs that I mentioned, those programs have what is called a project preparation element to them, where they provide funding for businesses to try and make them investment ready, helping them do feasibility studies for maybe new areas they want to expanded to create a business plan, helping them formalize. You have agencies like Smeden that will help them through business development, BOI. There are a number of these programs that supports businesses to use a Nigerian parlance, package themselves to tell the story of this is who I am, this is what I've done, and this is where I've gone, and give them the professional help and that they need to be able to put all of this together. I will ask Chioma to do all those things, but then to also find agencies that are set up to support him or her in this regard.
So Chioma needs to register the business, do a proper bookkeeping, proper documentation of sales and profit, loss, everything, and then have a business plan that shows you where you are now, where you're going, and what you have done in the past. This would help them be able to talk for you in the room when you are not present. Where should she go? What agency? And then follow up with the process there. And this is going to be able to give you maybe the 10 million that you need or the 50 million that you need. What next, please?
Primary agency that really has the mandate from SMEs is Smeden, the small and medium enterprise development agency. And they have a number of capacity building programs to support the SMEs. You got DOI as well, back of industry. And then you have some sector-based agencies as well, like the Bank of Agriculture for farmers. You have Nasini for tech and engineering based. The list is exhaustive. I think the first approach is to say, okay, she's in finance, so what falls under the Ministry of Agriculture? Is also in industry. What falls under? Look at the industries that intersect with where you operate and see what agencies under them, what they offer.
So if you were to go back in your 20s with the knowledge you have now, especially in maths, how would you allocate your first big four salary? Talking about budgeting, saving, aggressive investments. How would you allocate?
Oh, I wish I could go back. Fortunately, life, how do they say, the experience is the greatest teacher. The greatest teacher presents the exams before the instruction. Because after you've taken the exam, then there's always this framework where a third goes to investment, a third goes to savings, because you should build up a nest, like an emergency fund. And once you've built up that emergency fund, then everything else goes into investment, and then the rest you could spend it, because balance there needs to be balance. But interestingly, you asked me this question, and this is what I've been reflecting on a lot. And when I speak to young people who are starting out their career, there's a framework and who are watching. It's called
FIRE.
Financially Independent. It is a movement whereby you start aggressively investing the younger you are and putting a lot of your money into investments and into businesses, if you can, like starting businesses while you're also building your career. And through the magic of compound interest, if you're consistent over 10, over 15, 20 years, and you've been doing this while you're 20, by the time you get to your 40, by the time you're turning 40, you've amassed enough wealth that you can live off of the passive income and you can retire early. That's the idea. So somebody who's been investing aggressively when they started out their career and just investing and just keep investing, keep growing. If that growth rate maintains, depending on how much they were putting in, they could get to a point where they have enough money put away that the dividends from that investment, the income from that investment, can now, depending on how much they put away, be able to cover their expenses and maintain their lifestyle. And they'll be pursuing a career. Continuing to pursue a career, continue to work becomes a choice, right? It's a choice because you can stop working, but you have enough passive income from your investments to cover and maintain your lifestyle. What you choose to focus your attention on is not driven by financial. It is now purely for
Passion.
whatever it's passion. If I were in my 20s, I would have started FIRE. I started at some point, but that's what I would suggest people focus on. The younger you are, you should take more risk because you have time to recover. You've not built up the responsibilities that lives now would keep putting on you. You can't fail early and fail often, they say. The money you make, invest it and take opportunities to learn as much as you can in whatever it is that you're pursuing. If it doesn't work, then, try something else. Just be bold and take more risk with your career-wise, business-wise. That's one business idea, however crazy it sounds, you never know. I mean, some very successful businesses today, if you have read their business plan, private is no way.
Thank you. If you were earning 500,000 in your 20s, how would you allocate when it comes to budgeting, saving, investing? What places would you invest right now, Junanik? Where would you not put your money?
Well, investment is, remember I said you dimension it in 3 parts. One part goes for your emergency funds, right? One part you keep it.
That's 1/3.
Yeah.
1/3?
1/3.
Okay.
Yeah. Then a third goes to investment, and then a third, just keep it. It's just for your daily upkeep and whatnot, charity, whatever. Now that third for investment, then you need to dimension it further. I would suggest put some in the stock market. Blue chip companies, you have to do your research on this company. Yeah. That's why knowledge is very key. You have to see where the
economy is
going. If you can read the TVs, you have to see what's happening around you. I mean, there are people who the technical evaluations that people do, their price earning ratio, trading PE ratio, all those technical. There are books that'll teach you what to look at, right? You get into that, but there are books that'll teach you how to do evaluation of a company and then use that to see whether the company is priced right or not. But then the other part is also looking at businesses that can generate cash flows. You could enter into a partnership with your friends and start businesses. Even now with digital economy, you could be selling stuff online and cast. That's the reason why when you're young, you have so much energy, you don't have all the responsibilities, all of that. You invest, try your hands at businesses.
Thank you, sir. For young professionals and aspiring lawmakers listening now, what skills should they intentionally build to remain competitive?
Technology, we're going through the 4th industrial revolution. Yeah, just the same way computers transformed how we do business. AI and nanotechnology is going to transform how you have to be technologically astute and knowledge and interpersonal skills. So, a lot of times your ability to, at some point in your career, your ability to inspire other people, your ability to relate with other people is key. So interpersonal relationship is very important. Something that is very, very important is ability to communicate. Because if you're unable to communicate, no matter how much you know, and you can't get your point across, then public speaking, communication, being able to write well. Well, AI helps you that, right? Great. But you've been able to articulate your thoughts. And interpersonal skills. Ability to manage people's relationships. And as you go up in your career, it becomes more and more important opportunity.
If you could leave the listener with one actionable piece of advice to improve their finance or business outlook immediately.
For a young person, I'll say 5. Being able to invest your money, be consistent with it, and also take continuous improvement. When I was in consulting, it's something we say operational excellence. You have to keep improving how you do your business. Your processes are so streamlined that your businesses, when there's a hiccup, it doesn't have as much impact. Overall, it doesn't derail your business. Continuously improving and finding new ways to meet your customers' demands. Finding new ways to improve on what you're doing. Just keep improving the process. That's what I'll say for businesses. It's not easy, but it comes with a lot of attention and dedication.
Wisdom, and I can't appreciate you enough. I promised you all life-changing information, and I did, because there's no one that will follow all of this blueprint steps that John has given to us that will not experience a massive transformation in their business, in their career, also in your investment in financial life. Sir, before we leave, what gives you hope about the Nigerian economy? What gives you hope?
Gives me hope is that one, we have favorable endowments. Our human capital is immense. We have immense. It almost sounds like I said it's a mess. Immense. In the sense that 230 million people,
Yeah.
a lot of them young and growing, and we're going to even grow. That's a huge market right there. We have a large, literate, and increasingly connected youthful population. I mean, that's massive. Then the factor endowments that we have in terms of energy resources, mineral resources, agricultural resources, combined with the massive human capital, both locally and in the diaspora, it's just beautiful. So looking at all of that gives me a lot of hope that, we've talked about Africa rising when I was in my 20s, when I should have been focused on 5. There was a term, Africa rising, which was used to frame the next great countries that was going to come. And Nigeria was at the forefront of that promise. Everybody saw Africa were going to be it. Somewhere along the line we lost. Africa didn't rise. And now we've seen Asia countries go through their different waves of development. We've seen the first wave in South Korea and Thailand, Taiwan and China probably in the second wave. We've seen now the third wave with Vietnam, Indonesia. I think the time has come for Africa to take off. It's really come. So, and Nigeria is leading that. I think Nigeria is going to be forefront of all of that. Nigeria is going to be the catalyst for all of that.
A quick fire round, sir. Just so we wrap up, I'll let you. You've given up so much of your time, and we can't start it. I'm happy you do that. Cash or crypto?
Now, cash. Crypto, yes, but it's crypto is like the .com in the early 90s. Still, it's not mainstream yet. I mean, you have stable coin, yeah, but you have so many meme coins as well. I think it's an either or. I think it's an and question, not an or question, right?
What would you prefer? Like,
is this my own personal?
Pick one, yeah. Just pick one. Let's start. Okay. So, what's one book every young professional should read?
The Richest Man in Babylon.
Why is everyone saying that?
That's the one that teaches, because the theme of this. If it wasn't this, then I would have probably said something else.
Whichever one.
Animal Farm.
Animal Farm. Okay. Thank you so much, sir. And we're looking forward to many more conversations.
Appreciate it.
Everyone listening, thank you for always staying tuned and for subscribing and watching Financial Talk with Victoria. Appreciate you all. Until the next one. Ciao.